Good morning, everyone. Just give me a sec.
Hi, Luca.
Good morning, everyone. Can you all hear me?
We can hear you, but not see you.
Oh, goodness. Okay, just hold on a second. And just I think a computer a little bit slow. Just that, but it is. I am here. My video is working. I can see myself. So just a second. It's the okay. Okay, just a couple of adjustments on my computer just to make it a little bit faster. But okay, this one. Okay, good morning, everyone, and welcome to another interesting week in the crypto markets. So there has been, as usual, a lot going on. Let me just admit a few more people. Jaya, do you mind if I make you a co-host again?
Yeah, sure. No worries.
Let me just do that. Okay. Okay, now we're here. Okay, we'll talk about quite a few things this morning. Obviously, first and center is what's going on in the crypto market, but then I think we need to. This is time to zoom out actually and look at what's going on in the wider economy. Because crypto is not an island, but it has a reason of for existing within the wider macroeconomic climate. So we go and have a look at that as well. Okay, let me start sharing my screen straight away. Okay. Okay. First of all, let's start from a simple chart. I will not. I've already spoken about this at length, so I'm not going to spend too much time on this. But just so that you can understand where we are. This is a daily chart of Bitcoin against USDT, which is Tether, which is basically the US dollar, and we can see here. Okay, this is a daily chart. Let's go maybe to an hourly chart so we can have a little bit more detail. Okay, we were for quite a while, quite a long time in this band, this trading range, roughly between 26 and 36 and 31,000. Okay, so the area that's marked by the two blue lines. As we broke down below that, so another area of interest was this one that's marked by the yellow lines, which was between 24 and 21,000 really, but is being completely, I wouldn't say kind of obliterated, but it hasn't been quite respected by the price because it's gone, as you can see, price has gone straight through it. Now, where did I get those lines from? And this is kind of like a little bit of of an idea for you as well. We always go back and we look at the previous time, when price has reached certain levels. And then we
Sorry to butt in, Luca. We haven't got any charts.
Oh, for goodness sake. I've got it here. So
it's black.
I've got them as well.
I'll stop sharing and I'll start again. Okay, can you see now? Guys, can you see the charts? The chart now?
I can see them clear as a bell.
Yes, I can.
Okay, fantastic. So the way we use technical analysis, that we go and basically we go and have a look when is the most recent occasion when price has reached certain levels. Okay, and obviously here we're looking at a daily chart, so more of a kind of like a long-term view. But here, you know, the first time the price was, you know, the closest time to us, the price was around below 24,000, was in December 2020. And we can see, we can have a look at where, you know, sellers and buyers were fighting really. And so we can see here, you know, for about 1, 2, 3, 4, 5, 6, 7, you know, for about 10 days, price was in this kind of like yellow band. And why it is relevant as well, because we're looking at this big movement here. You know, when price went from, you know, 21 to 41 in a very short amount of time. Okay, so we're looking at when, you know, buyers that were, let's say, bulls, so they were hoping for the price to go up, actually made quite a bit of money, and maybe thinking, okay, if we made money then, maybe we can do it again. Okay, so this area has been, and we can see this area at a lower band, which was the lowest that the price had been in this you know, period of time. But really, if this band hasn't been respected and price has gone straight to it, then we go to the next one. And this is interesting because we see this thick blue line. So let me actually, maybe I'll take these yellow lines out of the chart, because you know, the least amount of noise we have on the chart, the better it is. Okay, so this thick blue line, it's interesting because, as you can see, it was acted as a resistance for quite a while as the price was going up. But why was this acting as a resistance? And then we need to go further back in time. As you can see, from 2020, we move back until we get to, excuse me, 2017. So that area there of around 20,000, actually 19,000, really, this is moved, I don't know, I think I moved it by mistake. But it was about 19,800. Okay, this is the 2017 top. And obviously this is a multi-year top, and then the price went down, and price only broke through that limit in 2020. Okay, so and why there was resistance here? Because obviously traders were wary that if you have been holding Bitcoin and holding it maybe all the way up from 4,000 or 5,000 to 20,000, and then saw it drop down to 5,000 again, you know, this represents hurt, you know, a world of hurt. Okay, so if you then, you know, got Bitcoin again and start seeing the price approaching that level, then you will be worried that the same thing might happen again. But the same thing, as it works on the way up, and we can see it here, it works on the way down as well. So where an area that was previous resistance, when price breaks through it, becomes support. And this is why we're looking at this. I've marked it as a thicker blue line, because we are now testing this level right now. Okay, so we are testing the 2017 market top. Okay, and so why is this interesting again? Is because a lot of traders, long-term traders as well, and also holders, they have put stops below this line, because they're thinking, okay, I'm happy to hold Bitcoin long-term, but if it goes below this amount, I might sell it. Okay, and not only that, but obviously a lot of traders trade on borrowed money. So they have enough money to support their position as long as the price maintains above a certain level. And this level, for many traders, that would have set up their accounts so that they would be protected until until this level. Okay, and then I might think, gosh, if price is going down, I'm not holding, I'm not holding my, I'm not putting all my money in there. I'll just stay out of the market and then maybe enter later. So what happens if that price is broken? It is very likely then to go down very quickly and see a similar move that we saw here. When price broke down, it went all the way down from 26 to 20 in a very short amount of time. At the moment, by the way, this is the green price is where we are right now. So we are about 20,900. And I would say in normal market conditions, we will look at this band, we would see at the lower blue band, again, as the origin of this big move. Okay, again, we're looking, whenever there is a big move, we look at the origin of the move. And so this might be considered the time when the price started moving actually quite fast, and we can see this angle has got steeper. Okay, so there are 2 points where we might look at where price might turn in normal market conditions. One is about 18,000 right here. Okay, which is where we can see the start of the big red candle, big green candles here. The other one may be the lowest price is reaching this band, which is about 16,000. But the move may be so violent that could go straight through that as well. And then, there would be nothing to protect the price until we get to this thick red line, which is the start of the bull market, which is about 10,000. Okay, so this is what we got to be aware of in the short term. Okay, I mean, at the moment we are at what is called the value price for Bitcoin. Okay, where I think we have gone through a lot of wash of the new money that say came into the market in the past year and a half, and most of the new coins, the ones from the wallets that are bought Bitcoin more recently, have been sold. So it's still, there is a very short supplies of Bitcoins on the exchanges, and it could turn around anytime. But the other thing to consider is that there are two big players in the market that could come into play and cause a big drop in prices are Celsius and MicroStrategy. Okay, Celsius obviously is a big exchange, as you know. At the moment, they halted all withdrawal. They halted basically everything on the exchange. They're saying that they still, paying interest on the amounts deposited, but you can't touch that. You can touch those those deposits. So remember as well, this, when you entrust your coins to somebody else, even if it's a big player like Celsius, Nexo, or Binance or Kraken, there is a chance that this can happen. And we talked about it before, like not your keys, not your coins. Okay, in the sense that if you holding cryptocurrencies for the long term, they should really be on your own wallet, where there is software on your computer, but even better, cold storage wallet, like a hardware device that stores all your keys. Now, so this is from the cryptocurrency kind of like price action right now. But if we see what went on this week, we need to have a look at the wider market. So if we go on here, let's change this to indices, and let's get the Nasdaq. Okay. Okay, so this is something that is comparable. So is the stock market, okay, is the Nasdaq. So rather than being the S&P 500, so the Nasdaq is where all most of the technology shares are listed. So is the closest thing on the on the stock market to to cryptos. And as you can see, this week hasn't been good for the for stock markets as well. And look at this. I think this is quite significant as well. You can see these gaps between here and here. and between here and here. So this is, where crypto is a 24-hour market, the stock market is just an 8-hour market. Okay, so it starts at 9 a.m. and closes at 5 p.m. In the US. So this is the difference from closing time and opening time. So there is a big gap from when the market closed one day and when it opened the next day. And again here, close one day, open the next day. So it's telling you that people were very worried and they were pricing in drops in the markets. So if you had maybe, I don't know, shares in a particular stock at on Monday or Monday evening, and then you went and wanted maybe to sell them first thing Tuesday morning, the price would be considerably lower when you go and access the market. Okay. Now, why this happened is mainly is if you follow the economic news, and we can refer here to, I use often Forex Factory, which has an economic calendar here. This is today's, for example. And it also, it's very clear because it's they mark things in yellow, orange, and red, with red being the important events, and yellow kind of like information, things that don't really move the market, and orange, they are midway. Now, if we go back this week, sorry, I'm going back too far. So if we have a look at a couple of days ago, this is the announcement, the federal funds rate announcement. So it went up from 1% to, the expectation of the market was 1.5%, and the actual raise, the interest rate was raised to 1.75%. So by 75 basis points, which is quite a large raise. And also, it was interesting to see how is the economy doing generally. We can see that retail sales are going down considerably as well. So retail sale went down from the previous month, it was 0.7%. The expectation was 0.1%, and the actual figure was minus 0.3%. So, and this is something that's important to understand, because, from one point, the reason why they're doing this is because inflation is at the highest it's ever been, it's been at least for the past 40 years. So they're trying to curb that inflation by basically withdrawing, spending from the economy. And if you raise interest rates, that means that people would spend more money for their mortgages, more money for their loans. So they have less discretionary spending available. So less money to spend in, to just go out in the shops and buy what they want. So this also has an effect on the retail sales, because people have less money to spend, and the next effect is on the stock market, because companies that sell to consumers will see their revenues going down, and so the share price will go down. Okay, and so on. So it kind of like it's a vicious circle. And this is in the US. In the UK, it came one day later, as it was a lower increase. So the increase was only by 25 basis points, but still we went from where we were a few months ago at 0.1%, now at 1.25%. And this also combined with very high inflation too. Okay, so as you can see, you can't avoid to look at these things when you're considering what's going on in the market, because prices don't just move themselves for no reason. There is always a reason behind it. And if you can see, Vanguard, which is one of the largest fund managers around, you can see Vanguard downgrades the global economic growth. So here they revised the outlook for yearly growth in US GDP from 3.5% to 1.5%. So quite significant. So less than half what they thought at the beginning of the year. And the reason they decide for that is the financial conditions have tightened to a level that's likely to restrict growth. Okay, and also this is interesting. If you read this, it says hikes eventually might even go beyond the neutral policy rate. This is thought that when Fed's key interest rates does neither stimulate nor restrict the economy, which they see at around 2.5%. Okay, so they say that if the interest rates grew to 2.5%, there will be no growth at all in the US economy. And next point is here, incomes are not keeping pace with inflation. Okay, so so where during the pandemic there was all this money that was being given to people to encourage them to spend, now it's the other way around. But also, when people see the real wage, so when I say the real wage is that the money they have to spend once you've stripped off inflation, because it's no good having more money if what you buying with that money is actually increase a lot more than your extra income. And the third reason being the foreign demand outlook has deteriorated, because especially for the war in Ukraine, but not only that, but also because the growth in China is fallen below the trend. Okay, because again, mainly because of COVID-19, but also because of slowdown on the world economy. So this is a kind of like bleak outlook, but this is what is expected, for the rest of the year. So they say they expect it to grow by another 100 to 150 basis points. So a basis point, by the way, is 0.01%. So it's talking about 1 to 1.5% on top of the 75 basis points that they were already increased at the beginning of the year. Okay, so this will, this is combined with a reduction of the money printing, could then potentially cause a recession in the US. When we look at closer to our to our borders, like in Europe or in the UK, I think it's even more likely than in the US to see a recession. So, Europe is slowing down, but also the CPI on kind of like headline goods is tracking about 15% on a quarter by quarter basis. Over the full year, we're talking an average of 7.5 to 8%. Okay, so there's been increased by over one percentage point of the previous estimate. So they expecting again a 1 to 1.25% rate hikes in the European Central Bank. Okay, so again, you see, the thing is that basically this is increasing costs for businesses and for consumers. So generally, you expect that if the economy is growing strongly, they can grow faster than inflation, and so have overall growth. But at the moment, we're going through, especially in the UK, we're going through a period of what's called stagflation. So of combined stagnation in the economy and high inflation, which is a really difficult thing for the authorities to counteract. Because they either fight one or the other. The other encourage the economic growth that also has an effect on inflation, or they fight inflation, which has an effect on economic growth. So it's very difficult to do both at the same time for an economy that is coming out of a really hard time, after the pandemic. So this is the kind of like overall look that I wanted to actually discuss with you, and this is what is powering, I'll say, the both the price in the share markets and in the crypto market. Now, here, if we go back to the Nasdaq, so for a comparison, I will say as crypto is not alone in this. Where are we beginning of the year? Okay, let's go from here. We are sitting now at the moment at almost like 33% decline in the average price of the Nasdaq. So this is mainly technology stocks, and if we compare it with Bitcoin, we can see that it's not that different from, the prices were really tracking each other for quite a while, and then Bitcoin seen as kind of riskier than technology stocks, so it's dropped even more. But you can see it's got a similar direction of travel. Okay, and as I discussed before, cryptos are generally more leveraged investment. So you can see this period here where the stock market was going up, but gently, then Bitcoin goes up quite a lot. And as prices started going down, prices start going down quite a lot in Bitcoin. So, but the two things, go at the moment, since the institutions started getting involved, I started going, in step, and showing a high correlation. Okay, so what I'm saying right now is zoom out, and this is down to I think examining the fundamentals and thinking, do I believe in this technology, in the growth of this? And then let's have a an analysis. If you had been in the stock market, or you've been in Bitcoin, for example, anytime from 2020, 2018, 2017. So even recently, as you can see the difference in price between the two items. And why is this happening, by the way? Why you're saying Bitcoin will grow more than the stock market, or the value of cryptocurrency keeps going up against the fiat currencies? And this is something that you need to understand. It's taken almost 70 years, from 1913 to 1971, for the authorities to convince you that you don't really need gold, that they better have the gold, and you should be happy with this paper thing that you can trade with. And there are two things that you should consider. One of the function of sound money, which over the history of humanity really has been represented by gold, is this salability across time. Okay, so in the sense that you have this thing in exchange for your value that you created through your work. You have gold, okay, as a medium of exchange, and you use it, let's say 1 year, 2 years, 3 years, 10 years from now, to buy the same things and more than you could buy 10 years ago, and so on. So it's got that value that's kept through time. The other aspect that needed to be considered is salability across space, in the sense that, as there always been the economic growth has always been stimulated by trade. So people who made money, those people who were controlling trade. And so gold, although being a very good store of value, it transports poorly across space, because let's say that you needed to do a sale from the UK to Australia, or something similar. Now, paying in physical gold would cause logistical problems. Now, combine that with just exchanging, for example, a piece of paper that represents a gold value in the vault of a central bank, it is a lot easier because it can be moved quickly, and even more when you are exchanging digital representations of value stored in a vault somewhere. Now, as fiat money replaced gold, and we went from let's say from a gold standard to a fiat standard, and now that scalability across space was facilitated, so the trade became a lot easier. Okay. Now, what is happened now though is there's so much. Let me say how to put it in a simple way. And what that has given the authority is control of this thing that we call money, that originally was just used between us to facilitate exchanges of value. And what really, and that's the real reason why all this was started, is simply because governments wanted to spend more than they had. And as simple as that. There's no other, you don't need to look much further than that. And they were just looking for a technical system that would allow them to do that. This came to light during the First World War, when the UK, that was at the time controlling the transactions across the world, was the center of world commerce. And if there's one thing I wanted to make you aware of, the rate of exchange of the British pound to gold had been set by none less than Isaac Newton. Okay, and has stayed the same from the 1700s to the First World War. So that rate hadn't changed. And then we had that phrase that we're all familiar with, kind of like it's as good as gold, because the British pound had become internationally as good as gold because it could be exchanged. Everybody knew the amount of gold it represented, so everybody could exchange British pounds for commerce. Now, to facilitate, the only problem started becoming apparent once central banks that wanted to trade using the British pound started, storing as a condition of trading British pounds on the vaults rather than gold. Okay, so the Bank of England realized that didn't need to have parity with gold and pounds, because many of the pounds that were in circulation were used for international trades. They will never be the gold that they represented will never be claimed. So they started issuing more pounds than gold that was in their vaults. And this came to a head during the First World War, when they didn't have enough money to finance the war effort. So they emitted a bond that wasn't fully subscribed. And to what happened then, and this is, by the way, something that only came to light a few years ago, because for about 100 years they kept these records sealed. What happened then is that the Bank of England gave credit to two of its employees, and then with that credit they could buy these bonds, and so they could tell that those bonds were actually oversubscribed and the UK had enough money to sustain the war effort. Okay, this was the start of everything that then led to all the depression in not just in the UK but in the US in the late 20s, and then later on Second World War and the Bretton Woods agreements, that where the US dollar was then de facto replaced the pound for international trade, and then in 1971 when the US dollar stopped being convertible from gold, from dollar to gold. So this is I think that we can now examine almost like exactly more than 100 years later when this happened, and we can examine now the fiat standard. And if you ask a question, who benefits from all this? There's only one answer, which is the governments that now have a kind of like a free money print to be able to create money from nowhere, but also, the banking system, because the banking system is how money comes into circulation. So all of you that are here, then if you have ever asked for a loan, you have actually printed money, because that's when money is being created. It's not created by the central bank, it's created by credit. So by any time a loan is created, new money is generated. Just think about this, okay? A bank loans you money to buy a house or whatever you want, but it's not money that they have in their accounts, in their coffers. It's money that is created from nowhere. And for that benefit, they charge an interest rate. So when you repay the loan, money then is destroyed from the economy, but the interest is kept. So they have generated an income for themselves. And on top of that is that they're not taking the risk directly, but the risk is who takes the risk, let's say, of a loan. If, let's say, I borrow money to buy a house and I can't repay the loan, who pays for that loan? It's not the bank that loses money, it's the value accumulated by all of us. Because when you think about it, when there is new money being created, all the rest of the money that's in the economy is depreciating in value, because there are now more of these things called whatever, dollars, pound coins, or whatever. So what we're all holding in our accounts is worth a little bit less. If that money isn't repaid, at the end of the day, we are all bearing the brunt of that cost. Okay, so bear that in mind. And so the attraction of Bitcoin long term is because it's a very sound, it's probably the soundest money that has ever been invented, and two, combines the sellability across time with the sellability across space, because now we can say that not only is that store of value that is guaranteed by the fact that there's only a certain number of Bitcoin that will ever be printed, but also it is much easier to use, a cryptocurrency network for transfer of value than it is even using the banking system. Okay, so on both considerations, it is a better option, and this is why it has grown so much from zero, or just an idea in 2008, to being adopted by nation states as the legal tender, and it is continuing to grow, long term. So this is my long-term view, just to, in a way, just take away from the panic that we see in the market. And if you start approaching this market by not overstretching yourself and not investing money that you can't afford to lose, then you can look at this calmly and seeing as an opportunity rather than as a disaster. Okay, because we now, the thing is that with the prices of crypto at these really low levels, although it could go lower, I'm not saying they couldn't, but it could go lower very easily. But we've gone back 2 years, so we've gone to pre-boom prices now. And for those of you that thought, well, I've lost the boat on cryptocurrencies, it's showing you how early we still are. We're really, really early in this process, and we, I personally see this as a generational opportunity. So again, just remember, never invest money that you can't afford to lose. And if you are looking to buy for the long term, then zoom out, look at weekly charts rather than hourly or 15-minute charts, and then compare it to something else that and that should give you a good idea, a good representation of what the potentials are. Okay, couple of new. I've only got a couple of things today to show with you for the point of view of news. One thing is the USDC. as you know, one of the main stable coins is now introducing a new euro stable coin. Okay, which is interesting, and USDC, by the way, it's 100% backed by currency. So for each USDC in circulation, there is a US dollar. This is report because they're certified. The amount of US dollars is certified by accountants, the grand total in this case, and we can see here. This is on April the 30th. They had about 49 billion USDC in circulation, and this is the value of the US dollars held on on behalf of USDC holders. So it's exactly the same. So each USDC in circulation is backed by a US dollar. Okay, and you can check. They regularly publish these reports. So you can check that an independent accountant has checked that is actually true. And not quite so much for for USDT, which is still a little bit shady. A couple more things to be careful of. This is the Bank of International Settlement has actually gone in and explained the what is called the minor extractable value, which is one of those phenomena that is well known in the industry, and is one of those things that many people are thinking that should be regulated, because it's it would be illegal in other markets. So the way it works is that whenever you do a transaction on a blockchain, your transactions are put into a pool, okay, and then miners go in and choose what transactions to include on the blockchain on the next block. Now, this is relating, when you're talking about minor extraction of value, this is relating by miners that are potentially going in, and when they see some transaction they know that could move the market, they go in and put their own transaction to take advantage of that movement. Okay, now when that is done automatically by bots, you can see that it's equivalent to from running by brokers in traditional markets. Okay, which is again illegal from running. So this is the way. If a miner observes a large pending transaction in the mempool that will substantially move market prices, it can add a corresponding buy or sell transaction just before this large transaction, thereby profiting from the price change. So you imagine that you see a transaction that could raise the price of Bitcoin by, I would say, $5. Okay, going from, I mean, wouldn't mean much to you, but what these miners could do, they could buy Bitcoin before that transaction goes through. So when the transaction goes through, they can sell, and it's pretty much a kind of like a free printable money for them. Okay, so although at the moment this is not illegal, and it is said that probably this wouldn't even be illegal because people know this when they enter the market and they're aware of the way the blockchain works. But it is kind of like a problem for the industry itself, because it's kind of like it plays with the idea of decentralization itself. So we could see, and this is kind of is going to be really difficult to establish, but we could see some kind of regulatory activity around that, and around how the miners accept transactions to include in the next block. On a kind of like more kind of lighter bits of news, Tag, I don't know, I can speak German, so you can read it yourself. Tag Heuer launched a new feature, so NFT displays on watches, so you can show your NFTs, you can show off the NFTs on your watch, and you can also, apparently, with some of the new products, you also exchange NFTs through your watch. I don't know how that will work, but we'll see. It hasn't been launched yet. it's actually showing you how brands now are getting in onto this market. And when you're thinking about it, yeah, the prices of everything are going down, but the technology is more and more every day is being integrated in day-to-day life. So, and these are all like, all these companies they are getting in are taking long-term views. They're not doing it because, it makes them money, next week, but because they see that the market is going that way, and unless they, they give the customers something they want, they're going to lose relevance. And this is the latest bit I can say. They're talking about one of my labs, which is Ferrari supercars. Okay, this is the Nigel, for the UK people, this is the car that Nigel Mansell drove when he was driving for Ferrari. It has been sold for $3.6 million. But the interesting thing is that the deal was completed using the Himalaya dollar, HDO, which I didn't even know existed, by the way, which is a stable coin pegged to the US dollar. Okay, so this is showing you how, it's becoming more commonplace for large, for large scale transactions to use cryptocurrencies now, because of the ease of the ease of transfer, because the customers at the end of the day want to use them. So more and more providers like Sotheby's in this case, or other auction houses like Christie's as well, are accepting cryptos are payments. So again, it's just another reason for showing you that how the adoption is carrying on every day. Whatever happens to this, which, by the way, when we were on the call, Bitcoin went up by about $400 or $500, I think. So just to see us from one, literally is, that's where we were half an hour ago, at $300. Okay. So whatever happens to the price, this kind of news is what's happening in the real world. So I hope that it does help you to actually make sense of what's going on right now. And I welcome. Now I know that I can see that there's quite a lot of chat activity. So let me stop sharing and take a few questions. Now, while I read the questions, anybody wants to unmute themselves and ask live?
Yes, Luca, I have a question for you.
Sure.
On what has been going on right now with the Celsius and all the other things that have, shocked lots of people. What is your opinion on people holding their money and staking and earning rewards on exchanges right now? Would you kind of recommend that maybe this is a time to just hold your keys, so they're your coins, and stop the staking and all those things and go back into safety while you still dollar cost average?
I think the answer is always education. Because when you talk about staking is something that can be done on chain. It just is a little bit more complicated often, and it might involve opening an extra, having an extra wallet to do it from. But if you stake on Binance, if you stake on Kraken or Coinbase or whatever, they don't invent staking. They just make it available for you, make it easier, so you can do everything in one place, but you can do it on chain. So my answer to you is that if you are holding cryptocurrencies on for the long term, they should always be in cold storage. There is one use for the cryptocurrency exchanges as well. But if you are speculative investments, especially if your investments are smaller, maybe you bought, I don't know, $200 of a small coin, often it's not economically viable to transfer it to cold storage, because the costs involved in, especially if they're Ethereum coins, the cost involved in the transfer, and then the cost of sometimes using exchanges, like doing swaps, on chain, might be kind of a little bit prohibitive for a small amount. So for small amounts, sometimes, I have several coins that I keep on exchanges because, to be honest with you, it's not worth the hassle of moving them to cold storage. But for all the important holdings I have, they're all in cold storage. And I think that's the only way that you can guarantee that nobody interferes with your funds. So that's how I see it. So crypto exchanges have got a use, but it shouldn't be your first protocol for everything. Just learn if you have investments, and I know, Shemin, that you are quite conservative as well in your investments. So I would recommend you to do it one by one. It doesn't have to be done all at once, but maybe every few days you could teach yourself how to stake a coin on chain, and then you do it, and then you move on to the next coin in your portfolio, and so on, until you transfer all your long-term holdings to cold storage. Okay, hope that helps. Now, Paul and Maria, as long as it's linked to the fiat system, it will always be affected by it. I'm not quite sure what you mean by that, or if it's a question.
I'll just make mention that obviously fiat does have some control over the way that cryptocurrency moves. Like I say, you've already explained about the Nasdaq, and obviously the fall in that. There's a potential effect there with cryptocurrency.
Yeah, it's not so much the fiat has control over crypto. It's the fact that at the end of the day, the value is determined by demand and supply. So how, if people are kind of like investing, so they're starting to look to invest in assets, any assets, then some of the money will go into property, some of the money will go in stocks and shares, some of the money will go in, other instruments, and some of the money will go in crypto. So everything grows at the same time because people are, have got more money than they need, and they want to invest it because they know that keeping it in the bank actually loses value. But when people are fearful or think that the market is, might go down, then they withdraw all their investments, and the whole cash is seen, for some reason, is seen as a, kind of like safe haven. Okay, so whenever there's trouble, people withdraw cash even from the banks, and there are lots of people that still want to see physical cash in their hands, although that represents about 3% of the actual money in circulation. But that's the way it is. It's at the end of the day, crypto is an asset class like anything else from the point of view of investing. But from the point of view of what is going for the world is a different thing, because the technology is growing, and it's allowing things that are not possible in the fiat world, and especially it's not controlled by design like fiat money is controlled, because at the end of the day, if you use I just tell you this, okay? If the government had to raise money just from taxes to do everything they had to do, and you had that money physically in your bank vault or in your pockets in gold coins, and they had to come and take it from you, there would be riots in the streets. Okay, the reason why they created all these things is because they have basically a free tap that they can open whenever they want. Whenever they want to do something, they can just create money out of nothing. And that money directly comes from you, comes from your value that you accumulated that is being devalued. Because every time there is new money that comes into circulation, means that your money is worth less. It's just that simple. It is just that simple. Then, they built a lot of things around it, so it looks complicated. But at the end of the day, the inflation is inflation in the money supply. The more money in circulation, the less your money is worth. So, and the other way around, now they're trying to control it. So now that they print so much, they're trying to restrict it now. but it's not. It doesn't work that way because it's kind of like pretty much a one-way street. And the only way they could control it is by doing what the US did after the First World War. Then, when they went back to a gold standard, and that caused the biggest recession that they've ever seen, and it caused the trouble that they had at the end of the 20s. But at the same time, although it caused a problem in their economy, that was a springboard and then made the US the powerhouse that it is up to today. Because what happened is that everybody else went off the gold standard after the First World War, but the US didn't. So what happened is that most of the gold found its way, because the gold finds its way wherever it's is valued more. So it found its way from the coffers of the UK and other countries to the US. So they got to the position then in the Second World War where most of the gold was in the US. And when everybody got together with the Bretton Woods Agreement after the Second World War, the new system that was established was based on the US dollar, because that's just who had all the gold. As simple as that.
So another question I had, Luca, you made mention, obviously, things took off in 2018. Do you know actually what, looking back in hindsight, what actually created that increase in Bitcoin?
I mean, there's two reasons. One is the coming to being fit to market, coming at the right time, being in the right place at the right time. And secondly, just like money printing. There was a huge amount. This is, and it's not just 2018, but it's from 2008. So this huge increase in money printing really came to light in 2008, because it was so big that nobody could ignore it anymore. Like before, you could just, it was incremental. Although it's something that's gone on from 1971, it was a little bit at a time. Okay, in 2008, it just became so obvious because it was all of a sudden, it's just like, well, we doubled the amount of supply. I think it just, when somebody becomes aware of new technology and you get new people coming in, and then the user base grows very quickly, like it has done, in the past few years, and that's when you see this huge increase in prices. With the economy, by the way, the economy is not just crypto that was growing, but the stock market has seen kind of unprecedented growth as well. One year after the other. I mean, the growth in the S&P 500 over the past 10 years has been an average of 16%, which is massive. So that's why. So Jonathan reminds everybody in the chat as well that staking on chain with Cardano is probably the safest in the cryptocurrency world, because you just keep hold of your keys all the time. You just delegate your voting, so you're not locking your coins into a smart contract. That they're always available to you to spend if you want to. Right, Jonathan? Correct? Okay, guys, I will need to finish right on time today because we got an event with Mark there. I need to be present in excuse me. But if anybody has taken part in the crypto week the AIW is conducting, today is the last day. We just have an question and answer session today, all about crypto. So if you're interested to know more, then join that event. Or again, remind you that Jonathan as well is running the Cardano event at 9:30. So just guys, keep educating yourself. And Jonathan, just be very quick to post the link, because I'm just about to close the room. Cornelia, I think it's if you look on the Modern Day Investor, there should be a link for the all crypto week. You need to register for that, and then it will be right now at 9 o'clock. So it's starting right now. So I'll say goodbye for today. I will catch up with you again next week. And Jonathan, I may be meeting you tomorrow. I might crash into the Cardano event. Okay. All right. See. Goodbye.